Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-timeframe technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. The pair that I want to speak about in today's video is GBP AUD, and the reason for which I want to speak specifically about this pair is because it is quite ready for a trading opportunity next week on it to obviously be capitalizing on the next move of the pair. So what I want to do is give you a full breakdown on it, showing you exactly what kind of situation we have both from a technical and in order flow perspective. And as usual, I want to provide a lot of value, so I will be keeping the analysis as educational as possible. So first, we will be speaking about this pair from a technical perspective. We will then go and see what is going on both on the AUD and on the pound from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And obviously, if you're able to read how they are moving their positions in time, you're able to have an advantage over your competition in the market. And by the end of the video, you will know exactly what kind of opportunity we can be looking for on this pair. Now, let's start from the monthly time frame. Now, on the monthly, we have a market which has provided a nice impulse to the downside. Now, after an impulse, what do you expect? You expect a retracement. And if you want to measure the retracement, what you have to do is take your Fibonacci from the high to the low of the impulse. And in this specific case, if we do take our Fibonacci from the high to the low of this impulse, we can see that it's 0.382 of the Fibonacci taken on this impulse is exactly here. And this 0.382 is lining up quite nicely with structure. In fact, at this area, we have previous support, which is now turned resistance here. So what we can expect is the market to go and be attracted to this area as a strong supply zone and a strong liquidity area in which I can grab the liquidity to then create the continuation to the downside, considering that this level is a historical structure level for this market, which was acting as strong resistance here. Then the market broke it to the upside. At that point, it turned support. The market tested it. Then the market broke above, broke back below, and at that point it is again resistance, and currently it is also lining up with the 0.382. So we can definitely expect a deeper correction to go and test this level, at least from a monthly perspective. Let's go down on the weekly and see what we have on the weekly. Now on the weekly, we have a quite different price action. In fact, on the weekly, what we can see is that the market is currently providing this head and shoulders. And this candle here, this weekly candle, is very near to closing out. And if it will actually close red like this, what will happen is that we will have a weekly break of structure. Why we will have a weekly break of structure? Because this zone from a weekly perspective is previous resistance, which the market broke to the upside. And after the market breaks it back to the upside, at that point, it is turned support. However, the market first, when it tested it the first times, it rejected it to the upside and it respected the area as support. However, what is now happening is that the market is breaking back below the area. And if we will see a close below this zone, then at that point, we cannot be looking for the continuation to the upside unless we will see another break and close above the zone, because never forget that once a level is broken, if it was support, it's turned resistance. So on the weekly, we are currently breaking structure to the downside. Let's go down on the daily and see what we have. Now on the daily, we can see that the break to the downside that we're currently seeing is actually providing the next opportunity on this pair. We had spoken about this pair quite a few times in the past. I spoke about GBP AUD when the market had provided this W formation. I made a full breakdown explaining all the reasons for which from here first we wanted to see a retracement to this level, and then we wanted to see a continuation to the upside, and that is exactly what the market did. Then we had the creation of this overextended W formation, and after this overextended W formation, I made another breakdown explaining all the reasons for which from here we wanted to see a nice move to the downside. And again, that is exactly what the market did. Then from here, we wanted to see the continuation to the upside, and that is what the market did. And the market stopped at the previous high and created this move to the downside. However, in creating this move to the downside, we had the creation of two actually M formations to the downside, which are bullish patterns. So when the market was here, I made another breakdown explaining all the reasons for which from here we wanted to see a nice move to the upside to complete the pattern. And again, that is exactly what the market did. And I will link all this previous analysis in description. So you find everything linked below, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. But at the moment, what do we have and how we can be looking for the next opportunity on the pair? Now, as I was saying, this move to the downside is bringing the next opportunity, because now on the daily, what we are creating is in M formation. And after an M formation, what you want to see is the market create a move to the upside to complete the pattern at the previous support, which at that point is turned resistance, which is the completion zone of the pattern itself. So from a daily perspective, we would like to see the market create a move to the upside. Therefore, we have a bullish opportunity on this pair. But before I show you how we will be approaching this opportunity with students, let's first go and give a quick check at what we have from a COT perspective on these two currencies, so on the pound and on the AUD. Now let's start by saying that we do have a new report which is coming out today. It's still not released, however, in a few hours it should be released. Now on the pound, what we have up to now with the previous report is very strong shift to a negative net positioning, meaning a weak pound. In fact, we went from having 12.7k net positioning, so a positive net positioning with 46.5k longs and 33.8k shorts, to having now a negative net positioning, almost minus 20k, with minus 19.7k net positions and a 34% short exposure and only 19.7% long exposure. So net positions are decreasing and the pound is getting weaker, with 1.6k shorts added with the new report and 400 longs getting closed, bringing the positioning from an institutional perspective on the pound of 27.4k longs and 47.2k shorts. So it's no surprise that the GBP AUD has been moving to the downside. Now, if we go and see what we have on the AUD, what we can see is that AUD is getting weak as well, with net positions going from 16.3k all the way down to minus 6.1k. with currently 48.8k longs and 54.9k shorts. Now, if we will see with the new report more shorts getting added, that would be great, because if more shorts get added on the AUD, we can actually expect the completion of the M formation at the neckline before a possible continuation to the downside, but at least we would like to see the completion. So how we will be approaching this kind of situation with students? Now, we know the move that we want to see the market create. However, we cannot take the trade immediately. Why? Because trading is not predictive. Trading is reactive. And the monthly, weekly, and daily timeframes are the best timeframes for the direction of the market. But the best time frame for confirmations and entries is the 4 hours. And obviously, the commitment of trader is also very useful when it comes to the direction of the market. But when it comes to entry and confirmations, the best time frame is always the 4 hours. And on the 4 hours at the moment, what do we have? Now, from a 4-hour perspective, at the moment, we have a market which is clearly moving to the downside, showing very strong bearish momentum. And until this bearish momentum will remain intact, and until the market will remain in such bearish structure from a 4-hour perspective, we absolutely cannot be looking for any kind of longing opportunities. Why? Because the market can easily continue to the downside, and the more it will continue to the downside, the better it will be. Why it will be better? Because when the market will be ready to shift from a 4-hour bearish market to a 4-hour bullish market, at that point, if the market has gone lower, we will have a better probability and better risk to reward for the move to the upside, since the market will have more pips to give us in its move to the upside, and a better risk to reward, and actually also better probabilities, because we will have a market that is more overextended. So the way in which we will be approaching this with students is, as usual, being reactive and not predictive. We will be monitoring price action with students from a 4-hour perspective during the move to the downside, and we will be waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. And if the market will shift from a 4-hour bearish to a 4-hour bullish market, at that point we will be adding GBP AUD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and completion of the information or overextended information at the neckline, or at least at the 0.382 of the Fibonacci taken on the impulse to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.